Alright, so in this video, I wanted to go over my P&L for September, so selling options. So as you can see, September closed the month with 1554 US. So these are confirmed closed trades. So this is confirmed profits, but of course, I still have a bunch of open trades. I've got about, let me just count here. I've got about 31 open trades. So I also wanted to look at my one of my subscribers' account here. His PNL was about, for September, was about 1368 US, as you can see here. Just zooming in a little bit. With about, how many trades are open? With about 10 trades still open. Now, the other thing I wanted to look at today is, so if you look at the P&L for September, it's 1554. I'm not too happy with it just because March I had 3,500, February I had 2,500, January I had 3,100. So it's kind of far from these highs here. So I want to go back to March and compare what was the difference between September and March. Why can't I seem to get back to these March levels? So I'm going to compare that as well. So first I'm going to go over the trades of September. So if I go to my trade log here for September. So for September, I only have, if I count the number of trades that I actually closed, I've got about 11 trades closed. So that's not a lot for one whole month. One trade here is AI here. It's actually a good thing that I closed it because right now it's trading at 45. I had a 50 strike, 50 put, naked put, that I had opened back in July 13. And I sold it once for $2, and I rolled it again for $2.02, and then I re-rolled it again for $1.20. So total credit received was $5.22, but then I ended up closing it for $3.90 when the stock came back up a little bit. And that's a good thing I did because now it's at 45. So that gives me a profit of $120. That was September 1st, closed September 1st. And then here's a Spotify trade that I opened back April 27th for earnings, and I rolled several times. So opened April 27th, I closed September 2nd. So that's almost 5 months. And I had rolled it so many times, my total credit received was $13.40. And I had a short strike of 240. I think Spotify right now is in the 220s. So good thing I closed the trade. I closed for $8.40. That gives me a $488 net profit. Peloton, that was open August 20th. I closed September 10th. It had an October 15 expiry. It was a 90 strike covered call. I got in for 86.88. So it's as if I sold a naked put at a 90 strike for $3.11. And then ended up closing it for example, $1. So the profit on that one was $200. And then I've got a covered call on open as well. I opened it July 14, closed it September 10th, rolled it a few times, of course, as you can see here, rolled it twice, ended up closing it for $14.32 on September 10th. Well, it had an expiry of November 19, so I confirmed a $195 profit. And then I've got a covered call on SFT that I opened a while back, March 16, closed it September 10th. Ended up closing it for a net profit of $128. And I think SFT is down now, so I could probably re-enter if I wanted to. Got an Intel covered call that I had opened July 22nd. Net debit that I paid was $50.62. I got out for $52.14. I got out a bit early, but just in case the market drops or something, I felt like I would get a better entry. So I just got out for $140 net profit. Etsy was a put spread that I had rolled. Yeah, this is a put spread that I rolled, I think before, I was after earnings. It was completely breached. I rolled it all the way to December. It was a total credit after rolling of about $1.10. I ended up closing it for 75 cents. That gave me a $22 net profit. The reason I closed it is because I just wanted to close any position that I had that was showing a little bit of profit, because I didn't want to hold too many positions and not knowing what's going to happen in the market. So I was just getting rid of anything that I didn't have to hold on to. And if opportunity comes back into Etsy again, I could re-enter. Same thing on Snow. So that was the same idea. It was a put spread that I had to roll all the way to December because it was completely breached after earnings. So I had to even increase the width of the spread. Total credit received was $1.30. Ended up closing it for 69 cents. That gave me a net profit of 48. So the goal wasn't necessarily to make a profit. I was saving a trade that had gone completely bad. So instead of losing $4 or $400, I ended up making a $48 profit just by widening the spread, moving it all the way to December. And I ended up closing it maybe a little bit early. I mean, it seems safe, but I just didn't want to have way too many positions open. I already have about 31 positions open. So anything with a little bit of profit, I just wanted to close it so that I have enough buying power in case the market crashes. I can re-enter trades. And then I have here Zillow. Here was a put spread from 95. It was a 95.90 put spread. Collected $1.17. This one was completely breached most of the time. I ended up holding it to expiry, but I actually closed it like 2 hours before expiry for 80 cents. And if I had held to expiry, this would have expired worthless. So I would have kept a full $1 profit here, or $1.17. So anyways, I ended up making $24 profit there. And then next here, I've got Twitter naked put at a 55 strike. I have this one I rolled. So I initially collected $1 and then I rolled it again for $1.44. So total credit received was $2.44. And then I closed it for $1.35 on September 23rd. So 10 days later. And for a net profit of $97. And then I've got Baba here was a naked put at 120. I think I mentioned this in the last video. So this one I opened for $4, closed it for $3 about 3 days later, giving me an $88 net profit. So that's what gives me the total here for September, a total of $15.54 US net profit for September. Let's look at the number of days these trades were held. Actually, let's look at the capital required first for these trades. So this is a naked put. It takes, depending on where the strike is. So it's a 40% margin requirement stock AI. So if I have, so it took about 0.4 times 50 because it was at the money. So it took about $2,000 of capital requirement. I had one contract, so times 100. So it took about $2,000 of capital requirement or buying power. Spotify, of course, took a lot. I mean, especially when it was in the money, but let's say it was at the money. It was actually in the money. So it took about 0.3 times the price of the stock, let's say 223, plus how in the money it was. So it was about 17 points in the money times 100. So Spotify took $8,000 of buying power from me. And in fact, at some point it took almost $10,000 when Spotify dropped to 203. So that one took a lot of buying power from me. I ended up closing it for 488 profit. Peloton was a covered call. So basically the buying power required was how much I paid, which is 86.88. So it took about $8,600 of buying power. Open here was a covered call as well. So it took about $1,200 of buying power. And then SFT was a covered call, but I had 2 contracts. So it took about $1,200 of buying power. Intel was a covered call as well. So it took about $5,000 of buying power. Etsy was a put spread. So it's the width of the spread. So about $1,000 of buying power. Snow as well was a put spread. Took about $1,000 of buying power. Zillow was a put spread as well. Took about $400 of buying power because the strikes are 95.90 minus the credit that I received. Twitter was a naked put. So I think Twitter was trading around 60. So it took about 0.3 times 60 minus, it was 5 points out of the money. So minus 5 times 100. So it took about $1,300 of buying power for Twitter. Not 13,000, but 1,300. So that's good. And Baba, that was interesting. I think Baba was trading at 150 or 145 when I made this trade. So Baba it's a naked put. So 0.3 times 145, let's say. And it was 25 points in the money, out of the money, sorry. So times 100 because I had one contract. So Baba took about $1,800 of buying power. So it's not bad for collecting $400, but I closed it for $3. And good thing I did because I think it's still trading less than $4, but I mean, Baba keeps dropping. And so confirmed an $88 net profit. So now let's look at the average days held in the trade. I'm gonna unhide some columns. I've got some columns hidden here. So let me zoom out a bit to make sure everything is showing. All right, I think everything's showing here. Okay, why is this empty? Looks like I have to drag the formula. There we go. Anything missing? No? Okay. All right, so average days held for September. Where are my September trades? So these are my September trades. So days held. So the average days is a lot in this case because most of them are trades that were being rolled for a while and I had to close them, right? So average days here is 88 days per trade. So that's a really bad example. Let's look at August. So for August, average days held per trade is 14 days. Let's look at July. Average days held in July was 9 days. Let's look at June. Average days held per trade is 34 days. That's kind of high. And let's look at June. Where's June? June starts over here. So from June to June, close date. Where's June? This is expiry. Yeah, I was looking at the wrong column. So let's look at June again. So June 2nd to June 24th. Average days is 34 days. Okay. Now let's look at May. Close date. So average days is 15 days. And then April. What is the average days for April? 17 days. And now let's look at March. March looks like it's going to be a little bit high, but it was my best month. March was my best month. So March was 21 days. Not bad. Average days held for the trades. So I wanted to look at March. Why was March, like if you look at the P&L for March, you could see it was 3,500. So what makes March higher, way higher than September? So I'm going to look at March here. What were my trades in March? So I'm going to hide the columns again because I don't need them. We already know the average days held. So I'm going to hide them again. Hide. Okay, so March, let me zoom in so it's a better view. One more, I guess. Yeah, okay, that's good. All right, so March, first trade here for March. So I'm looking for close date March right here. Okay, so first one was Zoom, a naked put for 320, close for 39 cents. So this is definitely an earnings trade. So there was more earnings trades. So I guess I'm not trading enough earnings this season. And then I've got a covered call on CCIV. So I was doing more covered calls on these speculative stocks as well. Palantir as well. Rocket as well. Although Rocket was a big one here, but this one was open November 13th. So this one was held a long time ago. It wasn't a 1 month or 2 month trade. Fubo is a naked put. Okay, $2 profit. Open was a covered call as well, I believe was held for a while. So I guess I'm going to put back the average days held. So unhide. And maybe I'll just hide this part here. Hide over here, days held. And I can zoom out a bit. Okay. So yeah, so as you can see, Rocket was 109 days. So that's outside of the normal trade. It was a trade that I kept rolling and rolling until I collected so much credit that I ended up closing it for $500 profit. So I'm just looking for what's different between March and September. Why is September not as high as March? Then I've got a put spread, okay, on snow. Average day, 1 day held, so it was probably an earnings trade. And then I've got Wish naked puts. Yeah, this is when Wish was still trading at the normal ranges. Okay, 3 day held on Wish. That's good. Dash naked put on Dash for $1.20 at the 90 strike. Good old days. 2 day trade. Palantir naked put again. Fubo again. Was this a covered call? No, it was a naked put on Fubo. Average days held was 7. Asana. So this was when Asana was trading at around 30. 1 day trade as well. Nice profit. Covered call on Space. Yeah, 221 days. So this was a trade that I held for a while. Kept rolling the credits until I closed the trade. Covered call on XPEV. Naked put on Lightspeed as well. Tattooed Chef. Covered call. Open. Covered call as well. 11 days held. Unity put spread. 39 days. Coop put spread. 3 days. Visa naked put. So you can see that there were probably more opportunities as well back in March. I mean, Visa had some high premiums at a 190 strike. I mean, almost $4 at a 190 strike. I don't think I can get that right now. Palantir again. So see, I was playing more of these speculative stocks and Curiosity, and they were still trading in a decent range as well. At Spotify, $5, close for $4. Peloton, again, had several Pelotons. So one thing I noticed that I was playing more trades. I was doing more trades, more covered calls as well on these speculative stocks. And the biggest gains here, 697 and 564, they come from old trades that I've been holding for a while. So that's, if I don't count these trades, let's see how much I made in March. If I don't count the 564 and the 697, because they were old covered calls that I just kept rolling, that gives me 2244. So yeah, so it's not that far off from 1554, about $700 more in March. Okay, now let's look at the PNL. Let's look at the return. So we're gonna look at 12 months. So right now my portfolio is around 130, a little bit less. So let's look at the profits. So let's bring out the calculator here. So let's look at the confirmed profits for the last 12 months. So I've got here September to January is 9 months. So let's add 3 more months. I'm going to include October, which was a really bad month here. October 2020, 593. So I've got a total here of 22,807 US. That's how much profit I made in the last 12 months. Now my portfolio wasn't always 130, but I'm just going to use 130 just to keep it simple. Sometimes it was ranging from October to September, was ranging between 100 and 130. So I'll just say 130. And the US rate keeps changing, so I'm just going to multiply by 127 right now. So it gives me about 29,000 Canadian in the last 12 months. On a portfolio of 130,000 Canadian, which is not even accurate. It could be a little bit lower, so that would make my return higher. So that's a return of about 22% per year. Yeah, so that's just including the closed profits. Now I know some people might say, well, you're not including the trades that are still open. Yeah, I'm not including these ones because they're still open. They're not realized, and some of them have realized profits. Some of them are unrealized profits, and some of them are unrealized losses as well. So I'm not going to include them. I'm just including how much profits I was able to, the trades that I closed, what are the profits or net profits over the capital that I have injected in this option selling strategy. Now, if I look at my open trades, I've got a cover call on Sophie that is doing well. It's already profitable, but I'm just going to keep rolling it. So Sophie could potentially be one of these covered calls that I have that have been rolling for a while, and then eventually I could make a good profit. I actually had a chance 2 weeks ago to close it for a $300 profit, but I didn't take it. Now it's showing probably like around $150 or $200 profit. I can probably close it for 16, so it's showing about $200 profit right now. And then I've got a covered call on Baba in my TFSA. So that one's pretty bad because my net cost is 173. And the stock obviously is at 145. So this is doing pretty bad, but I'll just keep holding on to it, and I'll keep selling calls. I'll even sell a call at 170. So I'll sell a call below my cost. But yeah, because I don't think Baba's coming back above 170 by November. Then I've got this cover call here, which is okay. It's about break even. I've got a put spread on SPY here. Expires October 18. As long as SPY stays above 416, I keep the 80 cents. I had a chance to close it for 28 cents. I didn't take it, but I definitely regret it now. I've got a put spread on the two put spreads on the triple Qs, 85 and 85, with short strikes at 340 and 335, expiring October 27 and October 29th. I've got a naked put on Path, which is about break even. I've got a put spread on Roku, which is not closable yet, but I pushed it all the way to November, and I've got a short strike of 290. Got a naked put on CRTX at a 15 strike. This one is profitable, but I'm not going to close it yet. I've got a put spread on Fiverr. I believe it's trading for about $1.20 right now, but I mean, it still got it until November, and the short strike is 155. I've got a cover call on Spotify at a 200 strike. Net debit was 195. It's out of the money, over 20 points out of the money, so no problem there. Just a matter of waiting. This one's Posh is doing pretty bad, but I'll just keep rolling it. I think Posh is trading at around $26 right now. I've got Coursera covered call, which is okay. This one's pretty bad. Skills covered call is pretty bad because I think Skills trading like at $9 or something. I don't remember. Pinterest is pretty bad as well. It's trading at 50. I've got a naked put at 65. 2 contracts actually, but I got total credits of $5. So my break even is 60, but the pins is at 50. I'll just keep rolling it. Not a big deal. It's not taking that much buying power out of me anyways. It's not stopping me from making new trades. I've got 3. Actually, right now I've got 3 trades on Peloton. I thought I had 4. So I've got 3 trades on Peloton here. I've got a 90 covered call, I've got an 80 naked put, and I've got a 75 naked put. Peloton's trading around 85 right now. So this one's a little bit break even. This is still profitable, but this is still out of the money, but not profitable yet. I can't close it. And this one's showing a little bit of profit, but still not going to close it right now. But as you can see, these ones are still very out of the money. This one I don't mind holding and rolling the calls if it stays in the money, but I still have until November 19. Luminar covered call, this one's doing pretty bad. Rocket covered call is okay. So I guess all the ones here in December, these are all bad ones. They're all rolled to December or super far because they were completely in trouble. So I pushed them all the way to as far as I could just to collect as much credit and just to not deal with it right now. So it's about 11 trades. So yeah, the HIMS, Root, RMO doing pretty bad, AVPT pretty bad, HIMS covered call as well, pretty bad. This one's not bad actually. Bitcoin here, ETF, this one's good. I can actually close it for a profit, but I was just trying to collect a decent credit, so I rolled all the way to March. So this one's not bad. This I can close for a profit, and I might actually do that just because I don't feel like holding it. Because right now I'm missing about $1.20 of profit if I hold all the way to March. So I don't feel it's worth it to hold all the way to March for an extra $1.20. I can get out of the trade right now for about $5 something, $5.20 I believe. So I might just do that, and my net credit is $3.90, so my profit would be $5.20 minus $3.90. Sumo naked put, yeah, this one's pretty bad. Wish covered call, very bad. And this is a naked put on Roku. So it was I initially had a put spread at 330, 325 that was breached. So I rolled it as a naked put all the way to January 20, 2023, but at a 160 strike. I mean, 160 strike on Roku while it's trading above 300 right now. I'm not too concerned. Got a total credit of 379. It is this put option is worth about $7 right now, so it's not closable yet, but not concerned about it at all. Even if it drops to 160, I'll be fine with it. And then I've got a naked put on Curiosity Stream. Yeah, this one's pretty bad as well. So yeah, so these are my open trades, and I've got about, I think I'm using about 45% of my buying power, so I've got 55% available, ready to deploy in case there are more opportunities. Now, if I go to my subscribers trades, so he's got September about 1368 net profit for September. Let's look at the trades now in September. Let me just zoom back in. So, okay, this is good. So September trades are over here. Okay. So first naked put here on Zoom, 260 strike, sold for $6.10, closed for $4.15. That gives a 183 profit. I feel like I had a Zoom naked put as well in my account. Let me see. I did play Zoom. Yeah, there we go. Oh, it was in August. That's why I didn't mention it. Okay, I closed it in August. So from 450 to 340, that was what, 98? Okay, that's weak. Tend to close my trades a little bit too early. All right. So let's go back here. All right, so Zoom from 610 to 415, 183 net profit. Then AI 45 put 320, sold for 320, closed for 220, $88 net profit after commissions. And then we've got a CrowdStrike naked put 230, open for 275, closed for $1.80, $83 net profit. Then Peloton 90 put, open for $3, closed for $2. But I had two contracts, $187 profit. Roku naked put 290 strike, open for $5, closed for $4, $88 net profit. And then Zillow naked put on a 90 strike, open for $4, closed for $3, $88 net profit. I'm gonna look at the average days held in this trade. This is gonna be a good one. It's gonna be low. Another Roku naked put open for $5, so 280 strike, open for $5, closed for $4, $88 net profit. Then Twitter naked put 55 strike, $1.05, 2 contracts, closed for 55 cents, so leaves $87 net profit. Lemonade 65 put, open for $2.20, closed for $1.70, left with $30 net profit. Disney was a good one here, 150 naked put for $2.05, only 1 contract, closed for $1.08, September 23rd, so 2 days later, $85 net profit. That was a good trade. Nike naked put for earnings, 148, open for $1.05. It ended up expiring worthless, but was closed for 11 cents, $82 net profit. Not bad. So it's a 1 day trade. Spotify naked put 195 strike, $4, collected $4, sold for $3, bought back for $3, $88 net profit. Baba 120 strike, open for $4, closed for $3, $88 net profit. Another Baba here, 135, open for $6, closed for $5. So you can see the trend here, the pattern, always a $1 profit, $88 net profit. CrowdStrike 220 strike, open for $5.40, closed for $4.50, so $78 net profit. So let's look at average days held here. So unhide, zoom back out. All right, let's hide the PNL, total PNL and commissions and legs. Hide. All right, and then zoom back in again. All right, so you can see for September, the average days held for the trades are average days 3 days. So 3 days held per trade. So that's pretty good. That's pretty quick turnaround. Yeah, some of them are 0, 2 days, 1 day, 9 days, 10 days, but on average it's 3 days per trade. That's for the September trades. And now the open trades remaining. Chewy 75 put 2 contracts. Chewy's trading around 67, so this one's in the money, but all we can do is roll. Path as well is trading around 52, but collected $4.70 of credit. Pinterest, this is safe. I mean, 45 put on Pinterest is trading around 50. 2 contracts. Peloton 90 put, this one's in the money, but collected $4.50, 2 contracts. FedEx, this is in the money as well. In fact, this strike here should be 230. So 290 strike, collected total of $2.90. And yeah, FedEx is trading around 222 right now. But I mean, FedEx is it's a good value stock, so not too concerned. Peloton 80 put, $3.15 collected, but it's an 80 strike. It's not in the money yet. I believe there's another Peloton. Yeah, there's another Peloton here. So 75 strike as well, collected $3.40. Got the CRTX as well, $2.70. Got the Spotify 195 put for $4. It was showing a bit of profit on Friday, like $3.50 about. So it was a $50 profit, but not enough to close. Fiverr naked put here for $4.30 at a 150 strike. And yeah, so these are the remaining open trades. So about 10 trades remaining with about 60% buying power, or even a little bit more, 62% buying power remaining or available in this account here. Now let's look at the return on investment here. So let's see how many weeks we've got. We've got 1, 2, 3, 4, 5, 6, 7. We've got 7 weeks. Okay. Now the account has exactly 100,000 Canadian. So we've got 7 weeks. We've got a total profit of 32.24. Actually, let me just refresh in case it's not refreshed here. Refresh. Okay. So we've got a total profit of 32.24 US times, let's say 1.27. So that's 4,000 Canadian divided by 7 weeks times 52. So it's about 30,000 a year. So that divided by $100,000 Canadian, which is the account size. So that's a return of about 30% per year. Annualized, it's 30% a year if we continue at this pace. And in my case as well, it was about 22%. That's if I continue at that pace as well. All right, so just want to share my September P&L and my trades. So if you have any questions, leave in the comment section below. Check out the referral links below as well. If you want to open an account with Questrade to trade options, use my referral link below to get $50 in free commissions. Thanks for watching.